Now friends, let me start with the discussion with respect to the depreciation, and a very simple part of taxation and very easy to understand. Very few things are pretty technical, and those things you got to be little bit extra attentive, otherwise things are very simple. Friends, first of all, let me introduce the depreciation concept under the Income Tax Act, where the depreciation is in relation to the block of asset. Basically, it is in relation to the group of assets. So you have to group the assets as your building, plant and machinery, furniture and fixtures, and the intangible assets for which the same rate of depreciation is prescribed. So if you have a building where the rate of depreciation be 5% or 10%, so you have to group 5% category of buildings in one particular block and group 10% depreciation category buildings into another block. Similarly, within a class, you have to keep on grouping that, and you have to keep on calculating the depreciation with respect to the group of asset and not with respect to the individual assets, as the case may be. The basic format here is for the purpose of understanding and the computation. Depreciation, very basic thing friends, first of all. Okay, so you will have an opening WDV, add whatever the assets have been acquired during this particular year. So you say add the actual cost. Don't forget that actual cost in terms of cash is not allowed, so there is a restriction on that you should consider. Okay. Further, if there is any assets which are sold during the year or sold, discarded, demolished, destroyed during that particular year, so you have this, you have to add the cost, you have to less it. Okay. Thereafter, what you get is called as a WDV of the current year. On this, you have to calculate the depreciation. Okay. And then you will get the closing WDV, as the case may be. Now, this is a standard structure in which the concept of depreciation under the tax laws operate. This is in relation to the block of asset. This is in relation to the group of asset. In other words, friends, each time individual asset that you sell, you do not have a taxable profits as long as the block has not become negative or the block has not become empty. So there are some unique situations, but normally add the entire cost and less the entire sale price. That means under the tax law, there will not be any individual assessable profits for individual transaction of that particular asset, where that particular asset is a part of the block of assets. That means logically, friends, this particular WDV is, that means this particular figure is basically your net figure. Logically, it is understood like that. Okay. In other words, it is a net cost over the number of years taken together right from the inception of that particular block. Secondly, friends, for the actual cost, if there is any cash exceeding the limit of 10,000 rupees aggregate in a day and all that, which I already explained it to you before, so that you got to keep it in your back memory. So the cash cost is not allowed, so there are some restrictions with respect to the cash transactions even in relation to this particular cost. Okay. Now friends, the asset, when it has been acquired during the year, if it has been used for less than 180 days, okay, so there is a test of 180 days. So in that case, it will be eligible for half the rate of depreciation. Otherwise, it will be eligible for full the rate of depreciation. For example, if the asset acquired somewhere in the month of the January, so January, February, March, 3 months only you have used it for the first year. So this is a test of half rate, full rate applicable only in relation to the first year and not in relation to each and every year. That means from the next year onwards, you will be eligible for the purpose of full rate of depreciation. Okay. Now, so this is how the computation has to be normally carried out. Okay. So you may have like block 1, then you may have a block 2. Okay. So similar, you have to keep on doing the adjustment. Okay. Now, one particular year, friends, there can be a situation where the sale price is a very heavy sale price. So this sale price is such a big amount of the sale price that your block becomes negative logically. That means your total cost, okay, your total cost is not sufficient to absorb that particular certificate. Logically, I call it as a negative WDV. Supposing, so that is straight away your taxable profits, but that goes under the head capital gains. So that is one of the situation. And one particular situation can be that you have sold the asset, but all the assets you sold, that means the block is practically empty. That means there is no actual assets into that particular block. So that has to be written off logically. But that under the tax law will again go under the head capital gains, and it will be eligible for the purpose of short-term capital loss, as the case may be. So this is the hardcore basics. Further, what is an actual cost? What is an actual cost is also defined under the law. There is a definition under section 43(1). There are many situations, like for example, I will tell you amalgamation, demerger, succession of business, the asset reacquisitions, etc. Previously, building was not used for business purpose. That means maybe it was a personal house and now it has been used for the business purposes. So such kind of situations, there are many different situations where the law is pretty logical and it defines that in this situation, this is going to be your particular cost. So this is one definition that we also have to learn with respect to this particular depreciation. Okay, some of the very basic thing which I want to again bring it to your notice with the help of the Barrett friends and little bit extra attention. In fact, it is quite simple only. So I'm just bringing those few technical words in front of your notice so that your MCQ, your MCQ understanding, because for this reason only I'm doing it. Okay, now see, the block of asset is already defined. Asset falling within a class of asset, okay, for which the same rate of depreciation has been served, to keep on grouping it. Okay, the grouping of the asset is keeping in mind buildings, machinery, plant, furniture, and tangible assets. Okay, so that is these assets being tangible assets, that means three categories: building, machinery, plant. Okay, and these are your intangible assets like your know-how, patent, copyrights, etc. So you are also eligible for depreciation on the intangible assets. Okay, now there is something called as half the rate, and that particular concept is 1, 2 or 2A type depreciation. That means these three different type of depreciation. Period less than 180 days in the previous year. Period of less than, that means you have used it for less than 180 days during the previous year. In that particular case, you will be eligible for half the rate. So loss is 50% of the amount calculated. In other words, these particular assets will be eligible for half the rate of depreciation, or you can also call it as a 50%. It is one and the same, whichever way you understand. Some of the specified assets which are also eligible for the purpose of additional depreciation, even those assets are covered by this particular concept of full rate, half rate. That is additional depreciation, that is 32 to 2A kind of situation. However, that particular additional depreciation also I will discuss in just some time to go, and it is basically an incentive, once again, which is provided by the law, and that is here. Okay, so this is your additional depreciation, okay, in relation to a new plant and machinery where you are eligible for this particular situation. Sum equal to 20% is your additional depreciation. Okay, so this is only the limited class and the limited type situation, only in relation to the new machinery or the plant, as the case may be, which has been acquired after a cut-off date. So that's okay. Assess is engaged in the business of manufacture or production of article or a thing. So basically, for manufacturing concern, this particular benefit is available, or even for the power units, generation, distribution of the power, as the transmission, distribution of the power. Sorry, generation, transmission, distribution of the power. Okay. However, if you are into some backward areas, then there is a 35% rate of the additional depreciation. So that should be kept in mind. Not a big thing, but should be understood. Provided that no deduction under this particular clause shall be allowed. That means for the specified class of plant and machinery, additional depreciation is not available. So that also we are going to do. So basically, it will be a mix of your normal depreciation plus the additional depreciation. But the point which I wanted to bring it to your notice was that half rate, full rate concept, it is applicable even to additional depreciation. It is also applicable to the normal depreciation, as the case may be. Now friends, come to this particular few questions with respect to the depreciation. Okay, now come to this particular page. Okay. Question ID number 34. First ever simple question with the conceptual clarity on the depreciation. From the following figures, you are required to ascertain depreciation admissible and other liabilities, if any. Plant and machinery, factory building. WDV at the beginning, air conditions in the factory premises, land at Bhubaneswar for the construction of the factory. Construction of the factory, total area 25,000 square meter, including 1,000 square meter for canteen. Construction of independent temple with a factory complex with view to boost the working morale of the employees. installation of lift in the factory building, road development in the factory complex, compound wall of the factory complex, sales during the some of the assets which are sold during the year. Company has two sort of plant and machinery, and when one is idle, the other is working. The plant and machinery was under maintenance and repairs for 20 days during the year. Go through this particular question, friends, thereafter I will discuss. Friends, this particular question that I'm already discussing with you, this particular question is also covered by a variety of the case laws. In fact, it is a summary of the variety of the case laws which I've just packed up in this particular question. Okay, so you are given, first you please understand, in this particular question we don't have that half rate, full rate kind of calculations, but here we want to understand the cost of the asset, or what is the cost of that particular asset. One of the things that we should assume any such question, that the monies have not been paid in cash, because that aggregate limit per day 10,000 rupees limit is also applicable with respect to the asset acquisitions in relation to the depreciable assets. So disqualification of the cost is also a possibility. So let us assume that that particular situation is nowhere it is printed also. So but it should be there in our back memory. So that is something which should be very, very clear. Okay, now you have WDV at the beginning of the year of the respective. Okay, now to this you have to add all the cost of the asset, okay, and you have to less the sale price, if at all any. So that sale price is ready-made printed to us in the question. So that sale price adjustment that we will do it. So no big deal in this particular question with respect to the sale price. Okay, now air conditions in the factory premises. Okay, now air conditions in the factory premises is taken as Thrulex here. Okay, so classification of the air condition in the factory premises should be taken as a plant and machinery. Okay, so where the doubt can come into the question, whether because it is in the factory premises, whether it should be taken as a factory building block or it should be taken as a plant and machinery block. Have you understood that? So that is one of the conceptual thing. Since it is air conditions, it is plant and machinery, so it will be taken in the plant and machinery block. Okay. Now land at Bhubaneswar for the construction of the factory. The land is never eligible for the purpose of any depreciation. In other words, it is building, plant and machinery, or furniture and fixtures. So this will not be eligible for any additions. Rather, it is not your depreciable asset. Now, construction of a factory, which also includes some area for the canteen premises. The courts were required to answer that, can the office premise, that means the office building, for example, can it also include the canteen building? In other words, canteen premises. In other words, is it also used for the purpose of business and profession? See, one of the condition under section 32 is that it should not only be owned by the assessee, but it also be used for the purpose of business and profession. So, the courts have said that this canteen, which is of course but for the welfare of this particular employees, is also used for the purpose of business and profession, so it will be eligible. And secondly, the courts have also clarified, now because this particular canteen is a part of the factory building, the classification of this particular one, the canteen premises, will also be like a factory building only. That means it will be the part of the block of factory building. In other words, it will not be a what should I say, normal building. So the rate of depreciation which will be applicable will be the same rate as applicable to the factory building. Okay, further, construction of independent temple within a factory to boost the working morale of the employees. Some of the courts were required to answer that construction of a temple, and again the question is clearly telling you that this is an independent temple. That means there can be a possibility that a factory building is a separate one, and away from some distance from the factory building there is a small little temple which is constructed by the management. Why? Because the employees' morale, the employees need to pray, the workers need to pray before, and they have that particular habit, and considering the demands of the workers, they might have incurred this particular cost. But can we say that this temple building is also used for the purpose of business and profession? Those kind of questions have been debated at the court level. The court says that we don't have to be, what should I say, emotional about this particular thing, because from the business point of view, this cost is but for the business. In other words, this cannot be regarded as a personal cost of the assessee, and therefore such temple premises will also be eligible for the purpose of depreciation as used for the purpose of business and profession. And because this temple is connected with the factory, it will be again identified as a factory premises only. This is another point that should be kept in mind. That means it should be the part of the same block of that particular factory building. Now, installation of lift in the factory. Installation of the lift in the factory. Now, it is installation of lift in the building. So, whether it should be taken as a plant and machinery or should be taken as a factory building. In other words, there are a lot of friends, what should I say, case laws on this kind of situation. Not only here in the direct tax laws, we also have a lot of such case laws and clarifications in the GST, where whether this particular kind of lift in a factory building should be taken as a plant and machinery or should be taken as a factory building. Okay. In other words, see, the question has printed that this is installation of the lift, and because the word lift is there, it is taken, and the question has shown you in the plant and machinery category. Okay. But the view and the very strong view from the courtroom which exists, that because it is inside a factory building, it is a value addition to the factory building. That means it is a part and parcel of the factory building. For example, there is a building. Inside a building, you are installing a lift. So lift independently is not capable of being functioned. I repeat, the lift independently, because it functions inside a building, and therefore the character of this particular cost will be of the building and it will not be of the plant and machinery. And so these 25,000 rupees should be taken as part of the cost of the factory building and not the part of the plant and machinery. Okay. Then the road development in the factory. Can you say that the roads are used for the purpose of business profession? A very, what should I say, corner kind of a thinking, but the courts have always said the roads are also used for the purpose of business and profession. In other words, you may have that particular doubt. Factory building, okay, is used for the business and profession, but how are the roads used? That means there is no manufacturing done on the roads, so you will feel that, oh my god, the roads are not used. But no, it is anyway, the courts have said that it is a part of the building. In other words, the roads within the complex, the construction of roads within the complex is a part of that particular building, so will be eligible for the purpose of depreciation. Compound walls, same concept, that you will always wonder, man, what the compound walls are used for the business purpose? I mean, what activity you are doing by sitting on the compound walls? However, you don't have to think like that. That you have to sit on the compound walls and do some business. It's not like that. But anyway, it's a part of the building. So the building is used for the business purpose, and this cost of the compound walls is again a part and parcel of that cost of the building. So this will also be eligible for the purpose of depreciation. Okay. The sales, that means some of the assets which are sold during the year. So this is the sale price which will have to be adjusted. Okay. Further, company has two set of plant and machinery. Now listen very carefully. Company has a two set of plant and machinery, and when one is idle, the other is working. In other words, many factories have this kind of, because their process, your manufacturing activity is such that you have to keep some idle machineries. In other words, in case if your main machinery breaks down, you will have to immediately start and continue with that particular process. And such machinery is also used for the purpose of business and profit. In other words, every use can either be a passive use or it can be an active use. It can either be a passive use or it can be an active use. So this is a perfect example of a passive use, which is also used for the purpose of business and profession. And therefore, you cannot say that because two sets, so I'll just make it as half of depreciation. No, that you can't do that. In other words, half not used and half used. These things you have not to think about. The courts have always said that this is also as good as used. Plant and machinery was under maintenance and repairs for 20 days during the year. The courts have also said that asset under repairs, the asset under maintenance is also as good as used for the business purpose. You should not imagine that because they were under repairs for 20 days during the previous year, so you will say 20 by 365 and a proportionate 20 days depreciation you will disallow. No, you don't have to think like that, because it is also a perfect example of a passive use of the assets, and the courts have always given, and these are hardcore fundamental concept, friends. You don't need to read the judgments on this particular front. Courts have always said that is as good as used for the business purpose and accordingly will be eligible for the purpose of depreciation. Now let's start with the straightforward computation of this particular question. However, here we don't have any what should I say, that half rate, full rate complications and all that kind of situation. You just go with the block computation and depreciation calculation. Okay, so let's do that particular thing very quickly. Just check all the numbers and start using your calculator very quickly. Okay, come on. You will have to do opening WDV. This is already given to me in the question. Additions during the year. Okay, here we have a lot of different categories, so that we will do. Okay, having done that, I'm going to also narrate some little bit technical other things, keeping in mind the capital gains and all that also, but step by step. Okay, so opening WDV, which is already given to me, 2,50,000 for plant and machinery and 10 lakhs for the building. Okay, additions made during the year, air conditions in the factory, lakhs. Land is never eligible for the purpose of depreciation. Construction of the factory, $8 lakhs. Let me just check the amount once again, back to back from the question. Construction of the factory, including the canteen. However, I'm not writing all this explanation now once again because I've already explained that. Otherwise, it will amount to spending a lot of time here. Okay. Then construction of the factory, temple is also part and parcel. Canteen is also part and parcel of that. So temple construction in the factory. $10,000. Lift in the factory building. So this lift, I will not classify it as a plant and machinery because it is not independently capable of being functioned. So that will be added to the block of building, that is 25,000. Okay. Roads, compound wall. Roads, the amount is 1,50,000. Compound wall, the amount is 15,000. Okay. Now, I'm just using one special word, friends, and these particular words can be useful from the capital gains computation, if at all any. So just remember these particular words. However, it will be useful, but a little later, not right now. Okay. Now, see what you have done is opening plus additions. Listen very carefully. Minus the sale price. Okay, minus the sale price. The assets sold during the year is how much? 6 lakhs here. Okay, and here it is 2 lakhs. Let me just check the amount once again, friends, whether I have done any silly mistakes. It is 6 lakhs and 2 lakhs. Okay, fair enough. Now, see, opening plus additions. Listen very carefully. The opening plus additions can be called as, from the capital gains point of view, can be called as cost of the block. It can be called as a cost of the block, or you can also call it as a cost of the assets, which is forming part of the block of assets. Okay. Then there is a sale price. The sale price should always be considered as a net selling price. This is also a fundamental concept. So rather than just imagining a sale price, should also consider net selling price. Now, for example, if there was any expenditure in relation to the sale of these particular assets, for example, some brokerage commission, etc., you might have paid. So that should be adjusted against the selling price. That means sale price will decrease by that particular extent. So indirectly, you are going to get deduction with respect to expenditure on account of sale or on account of transfer of this particular asset forming part of the block of assets. Okay, so if your block has become negative, see in the first situation it is total is 5,50,000 and your sale price is 6 lakhs, so a block has become negative. So basically your WDV has become minus 50,000. But I cannot write minus 50,000. This is only for understanding between you and me. Okay. So you cannot say that WDV is a negative figure of minus 50,000. Okay. So actually it should be written as nil. Okay. And in this particular situation, friends, whatever is your excess, that means your excess sale price over your cost of that particular asset, it particular amount will be a deemed short-term capital gains. So it will be called as a deemed short-term capital gains. Okay, I'll just leave some space here, and here it will be a deemed short-term capital gains under section 50, and that will be 50,000 rupees. That means this particular money will be chargeable to tax as a deemed short-term capital gains as per the concept of section 50 in the capital gains chapter. Very simple, and those barrack provisions I will also discuss, but that I will do it when I do the capital gains chapter, not right now. Okay, so this excess figure will be fully taxable. But as under the head capital gains. Okay, now in the capital gains you always require cost of the asset and the sale price. So look at this, I already told you that this is your cost and this is your selling price. So this difference is your capital gains in this particular situation. Okay, now in the second situation it is 10 lakhs plus 8 lakhs, just make all these additions. So it is going to be total is 20 lakhs. Start using your calculator. The entire sale price has to be adjusted, so there is nothing like block becoming negative or something like that. So this is going to be your 18 lakhs. On this you'll have to calculate the depreciation. Additional depreciation I'm just ignoring because no such specific things etc. have been given to us in the question. So depreciation, let's say at the rate of 10%. All these rates are assumed, otherwise you'll have to mug up all the depreciation rates also. So 1,80,000, and you will have a closing WDV which will again become opening WDV next year, that is a 16,20,000. Okay, so this is our net computation. Okay, and in relation to your block of the plant and machinery or closing WDV, I'll just put a dash there, and however that particular block may still exist. This particular block may still exist, okay, but it may exist at a zero value. Reason being that your sale price. So there may be a possibility that you have assets into that particular block, but you will not get any depreciation because the cost now logically has, that means WDV logically has become nil. But the block continues to exist as long as the assets into that particular block exist. Okay, that's all. Let's go to the next question. And all these points like 20 days idle and all that, those points don't require any special considerations. Okay. Question ID number 35. Vinay Limited acquired pressing machine for 10 lakhs. It had incurred 1,50,000 towards a trial run expense in buying steel plates and pressing tools, etc. The product generated during the trial run was sold for 40,000. Compute the cost of the machine for the purpose of charging depreciation. Your options are in relation to your MCQs. A. Cost of pressing machine will be 10 lakhs for the purpose of depreciation. Cost of pressing machine will be 11,10,000 for purpose of depreciation. 11,50,000, 8,50,000. All this for the purpose of depreciation. Second part of the MCQ, your options are what will be the cost if the trial run income amounted to rupees 2 lakhs. A. Cost of pressing machine will be 10 lakh, 11,10,000, 11,50,000, 9,50,000 as the case may be. You have to select your MCQs. Okay. Now understand, friends, a simple concept of the depreciation. Okay, so whenever there is any trial run, that means trial run means actually this particular plant and machinery has not been used commercially. So this is what we call it as a pre-commencement of this particular plant and machinery. So whatever is a trial run cost, whatever is our trial run costs, this cost will be part and parcel of the cost of the asset. This is one of the simple concept that you should keep it in our memory. So trial run had some costs of 1,50,000, but trial run also generated some income. So ultimately the net cost, ultimately the net figure will be added or adjusted against the cost of that particular asset. However, if your sale price was some higher figure, that means instead of this 4 lakh, your trial run itself generated revenues for you, that means made some profits for you, even that will be adjusted from the cost. That means whatever is the loss on the trial run or profits on trial run, everything will get adjusted against the cost of the asset. That's a simple concept that should be kept in mind. Okay, so if at all you want to do this particular formal presentation and the computation, I'll quickly do that. Okay, so this is your question, ID number is 35. Okay, so this is your 10 lakhs is the cost of that plant and machinery. Trial run in the first situation was 1.5 lakhs minus 40,000. So it was 1.1 lakh. Okay. So cost is going to be, net cost is going to be 11 lakhs 10,000. Okay. In the first situation. In the second situation, it was 1.5, but your trial run income was 2 lakh rupees. So ultimately the trial run by itself has generated profit for you. So that profit will also be adjusted against the cost of the asset itself. That's the concept of cost, actual cost of that particular plant and machinery. So net cost is going to be 9.5 as the case may be. Okay. So now straight away attack the MCQs. In the first situation, it is 40,000 and 1,50,000. So your net cost is going to be 11,10,000. So this is going to be the figure. Okay. So in that particular case, this is going to be your MCQ. Okay, answer. And the second particular case, it was supposing if the selling price was 2 lakh rupees. So actually it's a profit now out of the trial run. So that is going to reduce your cost by the amount of 50,000, and your ultimate cost of the pressing machine is going to be 9,50,000. And this is going to be the answer for the MCQs. Okay. Quickly, so you have this particular understanding. In any of these particular situation, friends, you should better remember that cash costs, that means if any payment would have been made in cash, so that is a limitation. So actual cost of the asset, if incurred in cash, will not be eligible for depreciation. Question is not printing this, so we are not commenting on that, but it should always be in your back memory. In detail, I've already explained to you in the past. Okay. Now friends, come to this particular question, which is a very good question on additional depreciation, and this particular question is one of the past examination question, and it was a very beautiful question of its class. Compute, let me read the question. Compute the quantum of depreciation available under section 32 and any other benefits available in respect of the following items of the plant and machinery purchased by X Limited, which is engaged in the manufacture of textile fabrics. New machinery installed on May 1. New windmill purchased and installed on June 18. Item purchased after November 30. Lorries for transportation of goods and sales deposit. Forklift used inside the factory. Computer installed inside the office premises. Computer installed in the factory. New imported machinery arrived at Chennai port on March 30 and was installed after 1 week. Except new imported machinery, all other items were installed during the year. Rate of depreciation for plant and machinery is 15%. Computer is 40%. X Limited has commenced the operations during the year. Total depreciation under 32(1)(2)(a) will be, your options are A, B, C, D, 20 crores, 17.025 crores, 22.2 crores, and 39.225 crores. Okay, go through this particular question, friends. It's a good question, which is a full-fledged computation on additional depreciation and also on the normal depreciation. Just go through the question. I'll just start the discussion in just some time to go. Come on. The question is already asking you that the depreciation under section 32 and any other benefits. Basically, question is not asking you additional depreciation, but it is none other than the additional depreciation. So that is basically a kind of an incentive which is provided by the law, available in respect to the following items of the plant and machinery purchased by X Limited, which is engaged in the manufacture of textile and fabric. Because it is in the manufacture of the textile fabric, new plant and machinery, this is how you should understand, new plant and machinery are eligible for the purpose of additional depreciation at the rate of 20%. However, some of the specified type assets are not eligible for the purpose of additional depreciation. So that is something that you got to remember in this particular situation. So and the second good thing that you'll have to remember is a test of 180 days, which I already explained to you in the past, that if your asset used for less than 180 number of days, then it will be half the rate, otherwise it will be full the rate. Another point that you should remember, that half rate, if normal depreciation, then additional will also become half rate. I repeat, if normal depreciation, because of that 180 number of days test, if normal is half, even additional will be half rate, as such that will be applicable, and accordingly you have to calculate that particular depreciation. And in this particular question, friends, you have that half rate, full rate, everything. So items which are purchased after November 30 will go for half rate because less than 180 number of days, and these items will go for full rate for the purpose of depreciation. Okay, so let me first of all organize my question, and these rates of depreciation is already printed in the question and given it to me. So question ID number 49. Okay, you have plant and machinery and you have computers. Okay, rate of depreciation, I will just make a note as already given to me in the question, 15%, 40%. Rate of additional depreciation, if at all some of the asset categories are eligible for the purpose of that, it is 20%, it is 20%, if at all it is eligible. Okay, opening WDV. Okay, I think we don't have anything in the question because it is first year of the operation, I guess, as per the data available to me in the question. Additions made during the year. Okay, additions greater than or equal to 180 number of days, that means logically the full rate of depreciation. So I'll just categorize here itself. Okay, or the additions which are less than 180 number of days, so half rate, full rate. Remember that additional will also be half if your normal depreciation. That means if 100, basically what I'm trying to say, 180 number of days test applicable to additional depreciation also and to the normal depreciation also. Okay, so and I guess that nothing is sold during this particular year, so there is no such adjustment. But anyway, we have new plant and machinery. We have windmills. New plant and machinery was 84. Windmills was 22, so nothing in relation to that in the computers category. Then we have lorries, forklift. I'm just first of all creating the structure, and thereafter we'll also discuss that additional depreciation and everything. Okay, so lorries is 3, forklift is 4, so nothing in relation to that. In relation to the computers in office and computers in factory. So in office it is 1, factories it is 2. The total is 113 here and 3 here. Just keep on checking the totals, friends. Anything what is sold during the year, nothing. But I will just put a dash for your better understanding. 103 and 3. Is that okay? I'll just categorize normal depreciation, and I will categorize additional depreciation. Normal and additional. Okay. Now Now I'll have to start doing my particular calculations. Okay. Normal depreciation, let us do that calculation. Very simple one, half rate, full rate. So no big complications whatsoever. One thing as a matter of trick, let me tell you that wherever there is half rate, full rate kind of assets, first you allocate the amount towards the half rate of depreciation, and balance, if any, you put it towards that's the best method of doing that particular calculation. However, there are some technical interpretations associated with that. That I'm not going into the details. So in relation to the plant and machinery, and the rates of depreciation is already printed to us in the question. Okay, so assets for less than 180 days, you will be qualified for, that means 7 crores will qualify for half rate, and the balance 84 plus 22, that is basically your 106 will be qualifying for full rate. Okay, so 7 multiplied by 15% multiplied by half. Okay, and the balance is 106 multiplied by 15%, that will be eligible for full rate of depreciation. This will be your normal depreciation with respect to your plant and machinery. And when it comes to the computer, so this will not be for the computer, and when it comes to the computer, we have 3 multiplied by 40%, and both the computers which is in the office premises and also in the factory, coming under the same particular block, and is coming for half rate category. Okay, because both of them have been installed after that particular November date printed in the question. Okay, this is going to be a normal depreciation. Come on, let's multiply. This is 7 multiplied by 15% into half. This is 0.525. 106 into 15%, that is 15.9. Okay, and normal depreciation with respect to the computers is 0.6. All the figures are into crores. Simple calculation, friends, with respect to the normal depreciation. Now let's come to the additional depreciation. Okay, 1 second, I'll just take it a little bit up here for the better understanding. I will just say additional depreciation. Okay, now friends, before I go ahead, come to this particular direct provision of 32 provisions. Under this, two things I want to bring it to your notice. One is that if the normal is half, even additional is half. That means 180 number of days test is applicable for normal depreciation also. It is applicable for additional depreciation. That is one thing I want to bring it to your notice. And second thing which I want to bring it to your notice is that so on certain specified assets, the additional depreciation is not, that means eligibility of the assets for additional depreciation is something which I want to bring it. These two things I want to bring it to your notice. Okay. First of all, your 1 second, see, your additional depreciation is contained in this particular provision of 2A, and your 180 number of days test which is provided to you here, 180 number of days test. Okay, that is somewhere here in this particular provision. Okay, where it is period of less than 180 number of days in the previous year, then it shall be calculated at 50% of the amount calculated in terms of percentage. Okay, so it is 180 number of days less than 180 number of days test applicable. Now this test is applicable to clause 1, that is the normal depreciation, clause 2, that is basically your SLM basis for power generation units, and clause 2A, this is your additional depreciation for all the three categories. That means for all the type of depreciation under the tax laws, basically the concept of 180 number of days test is applicable. That is covered by this particular proviso. Okay, and that is your proviso to section 32. Okay, that is your depreciation. That is one thing I want to bring it to your notice. So half rate, full rate concept applicable even for the additional depreciation. Okay, now I want to bring it to your notice. The concept of additional depreciation where eligibility criteria. Okay, section Subclause 2A, any new machinery or plant. I repeat, any new machinery. Here one of the main point is, friends, that new machinery or the plant is eligible for the purpose of additional depreciation. Assessee should be engaged in business of manufacture or production. Basically it should be a manufacturing unit, okay, or power generation, which is in generation, transmission and distribution of the power. So manufacturing units are basically eligible for the purpose of additional depreciation for new machinery or plant. New is very important. In other words, second hand assets are not eligible for the purpose of what should I say, additional depreciation. Okay. However, if you are in some that means if your unit is in some backward area, this Bihar, Telangana and all that, what is already provided here, for that the additional depreciation rate is 35%. That means higher rate of additional is a matter of incentive which has been provided under this particular clause. Okay. Further, these category of the assets, no deduction shall be allowed. That means additional depreciation is not eligible for these category of the assets. Is that okay? Now, if there is any plant and machinery which was before its installation, I repeat, before installation, was used either within or outside India, that means second hand assets, that means second hand imported asset, and even the second hand domestic assets are not eligible for the purpose of additional depreciation. Okay, that is one of the point. Second point, any assets which are installed in the office premises or residential or guest house, basically we are not connected with our manufacturing operations, will not be eligible for the purpose of additional. Normal depreciation you will get, additional depreciation you will not get it. Any office appliances or road transport vehicles. See, in our question there was lorries. So those lorries will not be eligible for the purpose of additional depreciation, but the road transport vehicles. Okay. And the next thing is, if there is any asset whose actual cost is fully allowed as a deduction in some another provisions of the law. So for example, if you have a scientific research asset where 100% capital cost is allowed to as a deduction. So if some another section is giving you 100% deduction, then again this particular section giving you further additional depreciation. Now that cannot be possible. So anyway, the intention of the law is not to give you that kind of a weighted kind of a benefit here. And so such assets which are eligible for incentives under different sections, those assets will not be, I repeat, will not be eligible for the purpose of additional depreciation. Now come to the question, baby. Come on. Okay. Now, in the question, friends, which are the assets that will not be eligible for the purpose of depreciation? Okay. Now, not eligible for depreciation. Okay. So, new plant and machinery will be eligible. Now I'm talking about only additional. So normal depreciation I already calculated. Okay. Windmills will be eligible. Now, basically, some people have a doubt about whether windmills will be eligible, because as such, windmills are not directly in relation to your manufacturing operations, but it is a plant and machinery and you are manufacturing concerned. So, considering the intent of the law, you should be eligible for the purpose of additional depreciation. For the windmills, some people say that, oh, it should not be available because it is directly not in your factory or kind of situation. But I'll go with the popular view that yes, windmills is also plant and machinery. So, they should be eligible for the purpose of additional depreciation. Okay. Now, lorries, you will not get any additional depreciation because they are road transport vehicles. Forklift, you can get it. Computers which are installed in the office premises cannot get the additional depreciation, but computers which are in the factory, they can be eligible for the purpose, because computer is also plant and machinery. So if they are in the factory, logically in connection with the manufacturing operations, will be eligible for the purpose of additional depreciation. Second thing, half rate, full rate, 180 number of days test, that will also be equally applicable. Okay. So now straight away do the additional depreciation calculation. Okay. In the first situation, it will be 106. That is basically your 84 plus 22. You will get additional depreciation 20%. This will be full rate because it is for greater than 180, greater than equal to 180 number of days. Okay. And if you see this, forklift will be eligible, but forklift will be eligible for half the rate. So forklift is amount invested is how much? Let me check. 4 multiplied by 20%, but it will be half the rate. This is in relation to your plant and machinery. Is that okay? So 106 into 20%, that is your 21.6. 4 into 20%. Keep on checking the calculator, friends. I'm just doing it orally and quickly, but there could be some calculation mistake. Come on, keep on checking it. Additional depreciation is 4 into 20% into half. That is going to be, all these figures are into crores. Okay. With respect to the computers, we have only 2 crores eligible for the additional depreciation, but that is only in the half the rate category. This is your additional depreciation. Okay, so you have to reduce both, even normal and additional depreciation, from the WDV. In other words, it is not that kind of over benefit. That means the cost that you have incurred, of that only you are going to get this particular deduction. Basically, friends, it is in real sense not additional depreciation, but in real sense it is preponding of the depreciation. That means normally if this additional depreciation was not there, then you were to get this particular benefit in the subsequent years, but because of this additional depreciation, you are getting some higher amount of incentive in the current previous year. Okay, so just calculate your closing WDV now. Quickly use your calculators. Computers is pretty simple. So that is going to be 2.2 crores. And this is 113 minus all these things. That is 74. Quickly, 74.575. Just check the numbers very quickly. Okay, so this is your total closing WDV, which will become your opening WDV in the subsequent year in relation to this particular question. Now, friends, come to that MCQ which we had here. Okay, the total depreciation under clause 32(1)(2)(a). This is a very beautiful way of asking you this particular MCQ. In fact, they are not asking you the total amount of the depreciation. They are asking you total depreciation which is under 32(1)(2)(a). That is basically your total additional depreciation they are asking you in the MCQ. Is that clear? So the total additional depreciation will be, because here, see this 21.6 and 40. That is in relation to plant and machinery, and in relation to the computer, this figure. So that is a 22.2 crores. This is our total additional depreciation under 32(2)(a). Okay, so the question was pretty smart enough. So here all these numbers have been given to us. That is 22.2. So this is your answer. This is your answer of total additional depreciation. Here they could have twisted, in fact even I could have twisted. This particular MCQ can also be like, give the total normal depreciation. That also MCQ can be developed. I'm just trying to make you imagine that, and accordingly you could have changed the answer. So instead of 32(1)(2)(a), they could have said that total depreciation under section 32. So you would have said that normal plus the additional depreciation. That also you could have said. Okay, they could have also said 32(1)(1). That also they could have said, or they could have just said 32(1), depending on the situation. Okay, so this would give you only the amount of normal depreciation. So this kind of variation, friends, can be created by using the section number in that particular MCQ. So I will once again go back and just show you that particular section numbers for your better understanding. But that could create, because it's a simple looking MCQ, but it's going to affect your answer like anything. Okay, so if you say that this is 32(1), okay, 32(1), again further having this sub clauses like 1, 2 and all that. So 32(1) is basically going to be your normal depreciation. Okay, in that you have this 1, 2 and all these kind of situations. Okay, so they could have stated like, by using that precise what should I say, the section numbers, and they could have twisted your MCQ, and that could have mattered you in the examination condition. So 32 1 and this particular clause in relation to your block of asset, this is a normal depreciation. This is such percentage on the WDV. So this could be the clause number which they could have used it. 1, 2, that way, including that particular subsection number. Okay. And if they ask you like 32.1.2a, they could have said like this also by using this particular section number, and that is here 32.1.2a. And they could have asked you that give me the amount of depreciation under this particular clause. That is your additional depreciation. And if they would have wanted the total depreciation, they would have said depreciation under section 32, which includes almost all the types of depreciation. So that kind of variation could have been created, and accordingly they might, I'm just telling you, by asking you all these variations. Okay, this is 32.1.2 could be stated. Okay. Accordingly, they could have created the variations in terms of the depreciation, and accordingly you would have given that particular answer. But the best option is this only, which seems 32.1.2a only. That seems better in terms of understanding. Okay, so that's it. Let's check up with the answer whether everything is completed. Yeah. Okay, complete pit to pat working. Yeah, just check your totals and update and finish your answer. Come on.